a question I have for you on that, along the same lines, and I appreciate all that explanation, the back and forth of how you obtain the Bitcoin and reliance on the futures and so forth to obtain that through various brokers. But I guess what I'm interested in right here is, this consistent refrain from the SEC in not approving the ETFs has always been based on the underlying spot market, right? They try to draw this distinction between the futures market and the spot market, and they say, despite the fact that we have confidence in how the futures are traded and there's sufficient surveillance sharing agreements, we have real concerns about the underlying spot market, where the majority of the volume is ex-United States and in various exchanges that we don't know if it's there's sufficient surveillance to detect fraud and manipulation. So I'm just curious, as a market participant here, in your role and having brought the spot ETF in Canada to market, what do you think of that argument? Do you think that it's a valid distinction there, or is it a distinction without a difference, as myself and many others think, in terms of how the SEC views the market and the spot market separate and apart from the futures market?
Well, I think when you're dealing with regulators, you have to at least respect the constraints that they have based on the legislation that they're trying to operate within. And so, when we built our fund, the only time in my life I've been on the phone with a regulator at midnight on a Friday was launching EBIT. So, this is a big lift, right? You have to get a bunch of people who have been focused on dealing with a certain structure within the financial industry to now look at things perhaps in a new way and see how the new thing fits within the old rules. And so just to preface my comments by saying I am not an expert on US ETF legislation, but I have a lot of friends who are. What I have heard in the past week is that the key to the BlackRock filing is the surveillance agreement they have managed to get put in place between Coinbase and NASDAQ as it relates to their ETF. And so within the rules, there is mention made of the need for there to be surveillance of a venue of significant size where the underlying asset that you're going to hold in your ETF trades. So significant size, Coinbase checks that box, and the surveillance mechanism is through NASDAQ's existing technology that the regulators use to surveil all kinds of other things that trade on NASDAQ all the time. This is something that is new to the BlackRock filing, and it's one of those things that when you look at it, you think, well, why is that in an ETF? We don't really talk about those things in other ETFs. That's a clue that BlackRock knows what they're doing, and it's a clue that they've been talking to the right people, because they're putting in place structures that seem a little bit unusual, but are meeting a particular need within the rules. And so what I think we kind of have evidence of as it relates to US Bitcoin ETFs is you've got the SEC on record saying that Bitcoin is a commodity, not a security, which is also supported by the CFTC Bitcoin futures. You've got now an exchange of significant size, being Coinbase, providing data on their Bitcoin trading to NASDAQ, who has a surveillance system that allows the regulators to look at the trades of the underlying and then look at the trades of the ETF itself and perform its surveillance function that they're required to do as a regulator. That's a really, really big deal. And that's one of the reasons that we are so confident that BlackRock's going to be successful on this, because you would not put a feature like that into your product unless somebody had told you, here's the checklist of things that you need, go ahead and go and do them. And so, it's similar, in fact, to our filing. We had to do things like remove, possibility for in-kind creations. We had to put in stipulations that we wouldn't rehypothecate our Bitcoin. We have to know our counterparty. There's all these things that are much more buttoned down in our Bitcoin ETF than, they're sort of assumed to be okay when we launch an equity ETF, for example. So those are the things that we expect to see being the reasons why they're going to be successful. And from talking to some other folks, it sounds like the other exchanges that have listings are running fast to try to get that feature built out as well. So yes. NASDAQ's not the only one. SIBO has some listings as well that are filed with them. And so that to us was the evidence that and BlackRock being BlackRock. But those two things together give us high degree of confidence that BlackRock has a launch solution.
Yeah, and they actually mention this in the appellate court brief in the Grayscale case. They talk about how the market of sufficient size needs to be one where there's a reasonable likelihood that a person attempting to manipulate the ETF would also have to trade on that market to manipulate, so that a surveillance sharing agreement with that market would detect and deter misconduct. So the question is, if someone were trying to manipulate the Bitcoin spot market, would they necessarily or reasonably have to trade on Coinbase?
Well, maybe another way to look at that, by the way, and I think it's relevant because it goes to the quality of these products. The index price that we're using, that BlackRock is also using, really deserves to be examined a little bit. So we use CF Benchmarks. CF Benchmarks is a firm out of the UK. They're owned by Kraken, and they are the reference price and the settlement price for the futures. So they've had probably somewhere $700 or $800 billion worth of Bitcoin futures have settled on CF Benchmarks reference rate since the beginning of 2018. Now, it's not just size and history that matters. These are the most regulated index providers in the crypto space today. They are regulated in the UK, where they're domiciled. They're regulated in Europe, and the futures themselves are regulated by the CFTC. They have a very, very prescriptive set of rules to become a contributing exchange. And I believe there are only 5 exchanges that qualify for their rule set. And that has to do with the exchange having protections against wash trading, surveillance systems, and other things to ensure that the exchange itself is a very legitimate entity where Bitcoin is being traded. Then on top of that, they actually measure the last hour of their trading window in 5-minute increments, and they knock out the top and bottom prices and then take the average of those, and then they average out all the increments across the last hour. So the point being, if you want to manipulate that index, you need to attack the 5 best run Bitcoin exchanges in the world every 5 minutes for a full hour to be able to change the price from what it otherwise was going to be. So best of luck if you think you can do that. I don't think it's possible. Oh, and by the way, you have to do it in a way that's not detected, because by being part of the BMR in Europe, these guys are legally required to report any possible attempts at manipulation. And so all of this is on their website, and you can actually go and see every single day they report, we did not detect any manipulation. And the next day they say the same thing again. It's unbelievably well put together and transparent. That quality of that index will allow BlackRock to do what we do every day, which is to trade over the counter for their Bitcoin at that price and have no slippage. This is critical to being able to deploy a product properly. Some of our competitors, when they launched, they were short settling cash to pre-fund an account to go chase their NAV price on some exchange somewhere. You don't want to do that. And I think it's sort of ironic that we've been running this Bitcoin ETF since February 2021, and I haven't traded any Bitcoin for it because I don't have to. I just go and make an over-the-counter contract with a counterparty for the price that I want, which is based on this very transparent reference index. And that's what we do. Nobody at Evolve is logging into, an exchange with all kinds of prices, going past them on the screen or anything like that. It doesn't happen that way at all. It's all very, very programmed. And so this is a tribute. And if I could just provide really a shout out to the industry. This industry plumbing, which is super exciting to me and probably boring to everybody else, this is what makes Bitcoin now ready for prime time, okay? And I'm a Bitcoiner, believe me, I have a hardware wallet, I have lots of Bitcoin myself, separate from my fund, but I believe that the future will be a future where we have a combination of the existing industry infrastructure that's available today, along with Bitcoin as now a key asset within that infrastructure that is included in the way in which people can work on their financial plan and save for the future. That requires these two things to come together. In 2017, when we filed for our first futures-based ETF and we talked to the big investors in the space, so big pension plans and others in Canada, the message we heard was, I can't talk about Bitcoin because there's too much career risk if I talk about Bitcoin. You fast forward to 2021, those same big investors were saying to us, I have to know about Bitcoin. There's too much career risk for me to ignore Bitcoin. And now with BlackRock, we think the conversation next year is going to be, I have to own Bitcoin. There's too much career risk for me not to have it. And people are going to do what Greg has been telling them to do for the past 5 years, which is they're going to get off zero. And I think that transforms everything.